Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 30th of October 2020. I have two wave counts, and for each of them I have a main and an alternate. The first wave count is bearish for the bigger picture. The main daily chart expects downward movement to a target at 1853 with a short-term invalidation point at 1849.22. The alternate is very bearish. It expects a new multi-year bear market may be in its very early stages and it may end below 1046. That was the low back in December 2015. The first short-term target for that one is at 1709. The second wave count is bullish for the bigger picture. It too has a main and an alternate daily chart. The main daily chart is the same as the other first wave count, expecting downward movement to a target at 1853. The short-term invalidation point is the same. The alternate for that one is bearish for the midterm. It expects a multi-month to multi-year bear market or huge big correction with an ongoing bull market that may be in its early stages, to possibly end around 1722 or 1508. Those are Fibonacci ratios. There is now increasing, although small, support for those bearish alternates, so please do take those seriously. They could be correct. This is the first wave count. The bigger picture for this one is bearish. It expects that a huge expanded flat for a super or grand super cycle fourth wave is unfolding. Within the expanded flat, here's cycle wave B, which may be incomplete and is subdividing as a double zigzag. Okay, that might all sound a bit technical and confusing. What it basically means is when this upward move is over, we could see a huge downward move to move reasonably below this point or substantially below this point. That's why the bigger picture is bearish. Within the structure of supercycle B, the double zigzag has the second zigzag beginning here and it's labelled cycle Y. A zigzag subdivides 5, 3, 5 and is labelled A, B, C. Within primary C we may have 1, 2, 3, 4, 5. The proportion here looks good on the weekly chart. When we get to the daily chart, I'll show you how the alternate, which sees supercycle B, could have been over here and could actually look pretty normal for this particular market. But for this idea, if we have 1, 2, 3, 4, 5, then 4, if it continues any further, may not move into wave 1 price territory below the invalidation point. And so this is the price point which would determine bull and bearish scenarios for the short to mid to possibly long term. If we see a new low, even by a fraction of a cent on a tick chart below this price point, this wave count is invalid. And we will use the alternate, which is much more bearish. And I will probably run this wave count for a little while longer at least as the main count, and I may not switch it to an alternate until price finally tells us for certain it's wrong. Although I may switch it sooner depending on the behaviour of volume and indicators within downward movement. And if we get a new low below this point, this wave count's going to really reduce in probability, but it's not invalid until 4 overlaps 1, violating the Elliott Wave rule. Here's the start of primary C. That's subdividing as a 5-wave impulse. 1, 2, 3, 4, 5. Intermediate 5 may also be subdividing as a 5-wave impulse. 1, incomplete 2, 3, 4, 5. 2 may not move beyond the start of 1. If we see a new low below this point, then we have to see intermediate 4 continuing further as a double zigzag, W, X, Y. But then it would be grossly disproportionate to intermediate wave 2, and it would have breached a channel drawn around primary wave C, which it already has, which has already reduced the probability of this wave count. And so if we see a new low below this point, I may swap this over to an alternate. Here's of minor wave 2, minute wave Y, the second structure in the double. Here's the start of minuet C. It must subdivide as a 5-wave structure. 1, 2, 3, 4, 5. 4 has remained mostly within this Elliott channel, so I'll leave the channel as is. 5 may find support about the lower edge. but if it's going to reach the target, then it should end within the channel. It's sometimes fifth waves end midway within channels. The target is for minuet C to reach 1.618, the length of minuet A. At the daily chart level, when I was on the weekly chart before, I told you I was going to show you how we could see supercycle B was over at this all-time high for gold back here, and this would have a normal look. My main wave count has a big fourth wave. It's all of this movement. But it's entirely possible intermediate 4 could have been over in just a couple of days back here. It's much smaller and more brief than its counterpart intermediate 2, giving my primary wave C a bit of a three-wave or curved look to it. This is actually absolutely typical for this particular market and for all commodities. Well, most commodities, some of them more than others, will behave like this. Commodities will have deeper, although this one's relatively shallow, but often they'll have deeper and particularly more time-consuming second waves. They move through the middle of the third wave, and then the fifth wave within the third wave exhibits the greatest strength, explodes to sometimes form blow-off tops in bull markets or selling climaxes in bear markets, and then a brief shallow fourth wave, and then a still strong fifth wave to end the impulse. And when it does that, the fourth wave is forced to be more brief and more shallow than its counterpart second wave, and that's what gives gold's impulses a curved three-wave look. So this wave count is absolutely viable, and it would follow common behaviour for gold. I just don't want to try and be picking a high. I want price to tell us which of the two wave counts is correct by invalidating or eliminating one or the other. If we have had a huge trend change at supercycled green, that's another reason why I'm hesitant to flip this over to the main, because it's such a big call. It's a huge trend change. If that's happened, then we have some good strength to start off the new movement, and so this supports this wave count. We have 1, 2, 3, 4 overlapping first and second waves with intermediate waves 1 and 2, minor waves 1 and 2, minute waves 1 and 2, and now minuet waves 1 and 2. This wave count now expects some increase in momentum as we move toward the middle of a third wave, and the fifth wave to end the third wave here, minuet 5 to end minute 3, and or minute 5 to end minor 3, could end with selling climaxes, because we could see slow beginning, acceleration through the middle, explosion at the end of these third waves. That would be normal behaviour for this market. So not only is this wave count quite bearish, it's telling us to look out for really strong movement possibly ahead. If this is the correct wave count, that could be that could be upcoming in coming weeks. When primary wave 1 is a complete 5-wave structure, then a bounce or sideways consolidation for primary 2 may not move beyond the start of primary 1 above the invalidation point. The target for minor 3 is expecting it to be extended because minor 2 was so deep, and this is common for bearish moves for gold for longer Fibonacci ratios. Minor 3 will reach 2.618 times the length of minor 1 at 1709. At the hourly chart level, minuet 3, beginning here, which you can see on the daily chart, may only subdivide as an impulse. 1, 2, 3 may be incomplete, 4 and 5. Within 3, micro 1 may be over here, micro 2, if it continues higher as a double zigzag, may not move beyond the start of micro 1. This wave count at the hourly chart level expects a third wave at 3 degrees for the short term to be beginning next week. And I have confidence points for us here. If we see a new low below this price point, this may become the main wave count. If we see a new low below this price point, it possibly could then be preferred over the more bullish alternate, which I'll go through now. At the weekly chart level, this is a more bullish wave count. It looks at the possibility the bear market for gold was over there and a new bull market has begun, with 1, 2, 3 continuing, and then 4 and 5 required for the first huge 5 up. There's a wee problem in terms of Elliott wave for this wave count though. Within cycle wave 2 beginning here, I'm labelling it as a double flat, W, X, Y, but within this first flat we have to ignore what looks like a really obvious triangle here, whereas the first wave count can see this movement as a triangle here. And so that slightly reduces the probability of this. It just doesn't have as good a fit in terms of Elliott wave. But it is entirely possible, especially as we're seeing new all-time highs from gold, so we absolutely have to consider this as a very valid possibility, and I'm going to label them 1 and 2, not main and alternate for that reason. If cycle 2 was over here, then cycle 3 may only subdivide as an impulse at primary degree. Primary 1, 2, 3 and 4 could be over. Primary 5 may be extending. This is actually very common for fifth waves within a third wave impulse 1 degree higher to be the longest extension for gold. Within primary 5, 1, 2, 3, 4, 5 could be incomplete. Within intermediate 3, 1, 2, 3, 4, 5. 4 may not move into 1. Now we're looking at intermediate wave 3 at the daily chart level. It must subdivide as an impulse. 1, 2, 3, 4, 5. Minor wave 5 may be underway. 1, 2, 3, 4, 5. The target is for minor 5 to reach equality in length with minor 1. If that target is wrong for this wave count, it may not be high enough. Minute 2 may not move beyond the start of 1. If we see a new low below this low back here, I may switch this to an alternate. Minor 4 may not move into wave 1 price territory below this price point. If this wave count is invalidated, it is discarded in favour of the alternate. At the hourly chart level, here's the end of sub-minuet C within minuet Y within minute 2, and you can see this on the daily chart. 1, 2, 3, 4, 5. I'd expect 5 to move at least below the end of 3 for this wave count, and here's the target for it. For the short term, the structure, invalidation point, target, and channel are exactly the same for both the first main wave count and the second main wave count. At the daily chart level, it's also possible that primary wave 5 could have been over here with a really brief and shallow fourth wave within it. And again, this is entirely possible. This is a normal look for gold's impulses. The labelling in here is slightly different between the second daily chart and the first main daily chart, and how I'm seeing the little subdivisions in here. Both of them are entirely valid. We need to seriously consider this possibility now. If cycle 3 is over here, then cycle 4 may have begun, and it should start with a clear 5 down at the daily chart level, and that's incomplete. 1, 2, 3, 4, 5, and I may need to move the degree of labelling for this down 1 degree in coming weeks if this turns out to be the correct wave count. Cycle 4 may not move into cycle wave 1 price territory. The invalidation point for this wave count is a long, long way away. It has a lot of room to move into. And in the summary, I'm giving you the Fibonacci ratios of cycle wave 3 as targets for support for cycle wave 4. Cycle wave 4 may unfold as any one of more than 23 corrective structures, which means analysing a huge correction like this becomes extremely difficult, and you have to work with multiple alternate wave counts. That's the nature of corrections. And so if the alternate wave counts are invalidated by a new low below this confidence point, I'm going to have to start to give you more alternates for this particular second wave count, the bullish wave count. I know it is confusing. It is what it is. It's just a confusing time within the markets for gold, particularly at this moment, in terms of Elliott wave, that is. In terms of classic technical analysis, there is now some evidence that we may have had a high back here, and I have long said we have got 2 bearish candlestick patterns at the weekly chart level. We've got one at the daily chart level. They had support from volume. The problem with bearish or candlestick reversal patterns is they make no comment on the next direction for price, nor do they make a comment on how long price will take that direction. There are 3 directions for price: up, down and sideways. And so bearish candlestick reversal patterns can mean a reversal to either down or sideways. They don't tell us which of those two directions it may take. And they make zero comment on how long the next direction may last, which means these two bearish candlestick reversal patterns may equally be telling us there's a huge new downward trend or there's a sideways consolidation to interrupt an ongoing upward trend. We will look to other technical indicators to tell us on balance of probability which of those two scenarios is more likely. At the high back here, we had a strong double bearish divergence while price was overbought, and so the probability that we have a major high in here is actually reasonable. But we had bearish divergence back here, and yet we just saw some consolidation, a bit of downward movement, and then new highs. That could happen again. We could see some consolidation, bit of downward movement, and then new highs. This bearish divergence could develop further. We could see a failure swing, or we could see a weaker high from RSI. And so that's one reason why I've been saying, I've been providing you with bearish alternates, and I've been saying that it's possible, well, more recently since this week anyway, and it's possible that we have a major high in place, but I want price to be the ultimate determinator of whether or not that's true. For the short term, downward movement has some push from volume this week, and on balance volume breaks below this support line. This tells us to expect more downward movement next week and would tend to support either of those alternate Elliott wave counts. ADX reached very extreme for the prior upward trend. It's still declining. Price has essentially been moving sideways. ATR is declining as price moves sideways. Its last increase was in these upward weeks here. So apart from this strong downward week, it hasn't shown an increase. RSI is in neutral territory, stochastics still neutral, plenty of room for price to continue lower here, and MACD is bearish. At the daily chart level, it looked like there was a triangle here, but the target wasn't met. It looked like there might have been a flag pattern unfolding here, but it didn't have a clear and strong breach, so I've removed those trend lines for the flag. Price is broken below support, about 1880. It hasn't managed to close back above that point. If it continues lower, look out for next support at 1800, but first a little bit of support at these prior lows back here. This downward break below support and close below support came on a day with strong downward volume supporting the downward breakout. So this is again indicating there's more pressure to the downside at the moment. I'll be expecting at least more downward movement next week. On balance volume is tightly constrained, so it's not giving us a signal either way this week. RSI is neutral, room for price to rise or fall. ADX is increasing. This is the strongest trend ADX can give when it comes up from low levels and rises from below both the directional lines. It tells us there's a new trend. In this case, because the negative DX line is above the positive, the new trend is down. ATR is declining as price moves sideways. There isn't a lot of strength in downward movement, although it's mostly been taken up with sideways movement so far. Stochastics is entering oversold, but because ADX tells us there's a new downward trend, we don't rely on stochastics for expecting to find a low. Let's use RSI instead. Stochastics is best used in a consolidating market to indicate swings from support to resistance, not in a trending market. That's all from me this week with your gold analysis. I hope all our members are having a fabulous weekend.